This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, October 13th, 2015. Euro dollar. So for the euro right now on a short-term basis, the pressure remains on the top side with the market trading up to as high as the 114 area ahead of the latest minor pullback. At this point, the focus right now is on some key medium-term internal range resistance, which comes in at 1467, which represents that May high. But overall, the medium-term downtrend favors the downside, with the market expected to stall out ahead of a fresh downside extension back below that low that we saw going back to the 3rd of September at 110.87 and towards 108.09 further down. Really, only a close back above 114.67 would compromise this outlook. Sterling dollar. So cable has put in an impressive recovery in recent sessions, though the market is now showing signs of stalling out after trading up to as high as the 153.83 area in recent trade. At this point, look for a lower top over the coming sessions ahead of renewed downside back towards recent lows that we saw, which came in around the 151 area, below which exposes 150.90, and then below there, psychological barriers at 150 further down. At this point, really only a close back above 155 would compromise the immediate short-term outlook, bearish outlook. Dollar yen. So dollar yen continues to show signs of contraction within a triangle, although the market is at the apex of this triangle, which does warn of a near-term imminent breakout in this contracted volatility. Given the breakdown that we saw back in August, a lower top is favored at 121.74, which would suggest that the break should go to the downside, with the market seen retesting that extreme August low at 116.12. At this point, only back above 121.74 would shift the current bearish outlook for dollar yen. Euro Swiss. So Euro Swiss continues to chop around over the past several days, though the market is within a recovery structure and is trying to trade higher back above recent highs at 110.50 towards the next objective at 112 further up. At this point, any setback should continue to be very well supported, with only a breakback below 107.14 to compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie has seen some impressive gains in recent trade, with the market recovering out from those recent multi-year lows just shy of 69. At this point, though, the market rally is looking a little bit extended after 9 consecutive daily positive closes, and the market could be stalling into some key, more medium-term resistance in the 74 area. Look for a potential for a bearish reversal back down towards the 69 area over the coming days, with only a break and close back above 74.40, 75 to compromise the bearish outlook. Dollar CAD. So dollar CAD is finally seeing a bit of a bottom after undergoing a well overdue and intense correction lower over the past several days, after trading up to fresh 11-year highs just shy of 135 at 134.57. At this point, look for the market to carve out a higher low and bottom out here in favor of resumption of gains and this bullish uptrend back towards 134.57 and above. Kiwi dollar. So Kiwi has also put in an impressive recovery rally over the past several days, with the market trading back up towards some key medium-term resistance in the 67-69 area. But the market should now find resistance in this area in favor of a more meaningful medium-term downtrend and bearish resumption back down towards those recent multi-year lows in the 61s. SPX 500. So the S&P 500 has rallied up in recent trade, though after the breakdown that we saw in August, there are signs of a major structural shift here. Look for a lower top in the 2020 area, with ultimately only a break back above 2050 to compromise this outlook. For now, key support comes in around 1970, and a break back below this level will be required to put an acceleration to open an acceleration back towards the downside. Again, only a close above 2050 would compromise the newly adopted bearish outlook in the S&P 500. Gold. So gold has pulled back in recent trade over the past session or so, although the market looks more constructive than anything else over the past several days, since bottoming out by multi-year lows at 1073 back in July. At this point, we're looking for a higher low at 1100 to be confirmed on a break back above 1170, which would open a move up towards 1233 further up. Again, any setback should continue to be very well supported ahead of 1100, with only a break back below that level to compromise the recovery outlook for gold.